Hi, everybody. Let me just see. I'm Kristen Bareuther. I should probably give you a little background about me. Most of my historical background is actually in distribution. So I was part of the executive team at a company called Charmer Sunbelt, and we merged that entity with the Wirtz family to create Breakthrough Beverage. But most of my prior experience was really more in terms of thinking about, how do we create the best route to market possible for our various suppliers? And how do we balance that with sort of the needs of the organization? So I did quite a bit of that in my prior life as the head of corporate development. I really left that about 4 or 5 years ago, largely because I really enjoyed, quite frankly, consulting for various people that I knew, just on a private basis and trying to help them as they were thinking about bringing their brands to market, and very distinctly trying to think about, what am I going to do about distribution? How am I going to get my product to market? I have this amazing brand, and it feels like it's a real slog to actually get through it. So that really led me to private equity, and I joined a firm called First Beverage. We are private equity solely focused on the beverage space. So let me move forward a little bit, and I can share some of that. We actually have 2 private equity funds. The first fund, which was a little before my time, was purely focused on non-alc investing, and most of those were very early stage companies. In our second fund, we wanted to actually have both bev-alc and non-alc as part of that fund. But we are different than what I'll call kind of common private equity that might be involved in CPG. They typically are thinking about the business broader. We very distinctly as a team are just focused on beverage. What's unusual, which is one of the reasons I put this picture up here, is I think when I joined at the beginning of our second fund, we viewed bev-alc and non-alc as being 2 separate, distinct things. When I look today, they're merging. I'm sitting here actually drinking one of Lyre's products, which is a non-alc. I think it's a non-alc Prosecco, if I'm correct. So, those 2 worlds are coming together and thinking about how you bring your product to market and do it effectively. Some of that crossover for our team has actually been very, very helpful. So we're both minority investing through our private equity funds. We're typically writing checks that I'll say are in the range of $5 to $15 million. And then separately, this is somewhat very recent, I should say, in the past year, we actually turned around and raised very distinctly some capital to turn around and make a majority acquisition of what was one of our companies, which was Health Aid Kombucha. We saw an enormous opportunity in, I'll call it 100 million plus businesses, specifically that were non-alc and had just turned the corner and had become EBITDA positive. And quite frankly, Health Aid was a really interesting opportunity for us that we are quite familiar with. So we have a lot of flexibility, I guess I'll share, in terms of what we invest in. We are looking at things that are larger and maybe majority stakes. But similarly, I'll say for my entire team, our sweet spot has actually been stuff that's a little bit earlier stage, where we're really getting behind a founder. So to give you an idea of some of our brands, Essentia, we were a very early investor in Essentia, which recently sold to Nestle. We were an investor in Drizzly as well, which sold to Uber Eats. We're an investor today in Q, which I've been having a lot of today as I walk around having different cocktails. We're also an investor in a whiskey company out of Denver, Colorado, and today they're actually the second most purchased product in the $50 American whiskey space in Colorado, which is pretty incredible. So we're an investor in Gem and Bolt, which is now a part of a company called Amass. Amass has a set of botanical products. Their core product is a gin, and then they also have a relationship with Katy Perry, and they're launching a non-alc aperitif called De Soie. VitaCup, which is a vitamin-infused coffee company. And then to the celebrity point, we're actually an investor in Mad Tasty. This is a little bit different. We don't usually do celebrity things. Actually, Ryan Tedder, who is in this photo here, I don't know if everybody's familiar with him. He does have a song in Top Gun Maverick. So if you don't know who he is, you'll probably realize who he is relatively quickly. But he actually came to us with a set of different ideas. One of them was a sparkling water and one was a CBD beverage. And we've been partners with him now for about, I'll say, 1.5 to 2 years. A little different than our other investments. He had conceptualized everything associated with that brand, but he hadn't actually brought it to market. And we usually don't do stuff that's pre-revenue. I think it was something really unique. And similarly, he was a truly engaged founder. He still is. So I don't even know if you see his concerts, he's always wearing, one of the baseball caps that say Mad Tasty on it. But he really is the leader of that company. And then our last one is Health-Ade Kombucha. So today we actually were the number 3, but we're now the number 2. We just surpassed the number 2 kombucha player in the country. And obviously this is non-alc, so we spent a lot of time trying to make sure that our kombucha is below 0.5%. So it's interesting just as we think about the convergence of bev-alc and non-alc spaces. I thought to the point of an anatomy of an attractive investment, it would be helpful to sort of walk through some of the things we think about and some of the nuance associated with those, and hopefully at the end there's a little bit of time for Q&A. And these are very common. I think these are quite common if you think about private equity players investing in a similar fashion. On market size, people are looking for large markets. To them, that's going to be $1 billion market. It's a growing market. The speed of innovation potentially has been slow in that market, so maybe there's some lazy incumbents and you're showing up with a new product. What I really think about with this is, is tackling market size when there is no market. As I pointed out, I'm sitting here drinking a non-alc cocktail. That market, I would say that market doesn't really exist. One would have said maybe NA beer didn't really exist. And the one that I think frequently about is something like hard kombucha. Hard kombucha really didn't exist as a space. So how you define that market is actually pretty important. But as you think of the investor pool, they're going to be looking for you to be able to show that it could be really a significant market over time. So the brand, these are very basic ones. So when I think about brand, the one thing I'll share is, most of the presentations we share or we see from different players, a lot of it, I'll say sometimes is missing this real deep analysis of the competitive set and competitive differentiation. So I think that's a big one. I don't know that everybody always spends enough time really thinking about that. And what I can share specifically as I think about spirits, it's easy to talk about how, as an example, Law's Whiskey is really differentiated in Colorado. To talk about how Law's Whiskey, our whiskey company, is differentiated in New York amongst a bunch of different products is really important. So being able to actually get beyond your home territory and talk about differentiation and competitive set is pretty critical. The other one that is from one of my colleagues, he said emotional appeal is really critical, and I thought this was a great point. He said, if you have a product that I can recommend to one friend, that's great, but it also means that your product is pretty niche. Like if you're actually designing something and I'm thinking about mass appeal, an emotional appeal of that product, really it should be something that I want to recommend to all my friends, not to my one friend who's the yoga person who really likes functional beverages of a specific type, as an example. So team and plan, the team is really critical. I think, and a lot of these are common, you have to have basic metrics you might want to have, which are strong, sustainable growth in your home market. In addition to the team, we'll look at things like velocity, that you have best-in-class margins, and you have the ability to scale. So those are kind of all the things I put under sort of team and plan. What I'd highlight is, and I don't know that people always think about this, if you're a minority investor, you're really evaluating whether or not it's a founder group that is truly engaged and that you can align around that founder group, wrap your arms around them and help them build their business. So we don't control people's businesses, and that was sort of the intention, I think, from both our Fund 1 and Fund 2, was to be a minority investor. And I'll say, most early stage businesses are pretty fragile. It's really hard to build something out the gate from scratch. And it comes down to, is the product great? Are you in the right market at the right time, I'll say? And the third one, which is really critical, is the founder team really deeply engaged and solid and capable of kind of getting it off the ground, which is a tough challenge. So I share this just as you think about what you're sharing with different investor groups. It's helpful to also be aware of that. You are the most important factor on whether or not they're going to invest. So I will say clarity on specifically how the margins can evolve. I would love to say that everybody I talk to has great margins. They don't. I mean, if you're doing an RTD product and you're producing a few cans, it's pretty expensive. So we know it's not going to be that attractive, but I've seen a few people actually show really great pictures of how they can actually evolve their margin with time with scale. So that would be pretty critical. And then the last is path to break even. Fewer people talked about this pre-COVID, and I'll say more on the non-alc side of our business than the bev-alc. On the non-alc side, I think there was a notion of, I don't ever have to show that I can break even. I just have to build a really big brand and Coke's going to want to buy it, Pepsi's going to want to buy it, et cetera. I think increasingly you see a lot more scrutiny about that, and people want to see, what's the path to get there, and are you clear about how critical that is, that you're going to build something that can sustain profit and grow profit over time for somebody else. Deal and exit, the potential to deliver a strong return would matter to us, exit feasibility, and our ability to add value to what is your business. The three things I think about with this is risk, return, and check size of various groups matters. This came up actually as we were helping somebody else, raise some capital, and I found it really interesting. It was lower risk and potentially a little bit lower return, and there were a lot of people who said, I only do high risk, high reward. And I'll say for me personally, I was willing to write a check into what this entity was, but it was an interesting dynamic to me of like really being clear about for different groups, what are their expectations on the return, and is that the right group for you to be really talking about or talking to? The other part I'll say is to the same example I just gave you. A lot of times, even if it's not the right group and you're talking to them, if somebody there buys into the fact that you have a great product, the market's there, it could grow someplace. If there's somebody like us, they're probably going to turn around and say to an investor group, hey, have you heard about the following? Why don't we structure something a little bit unique and go do this? So don't ever think that because somebody has parameters that they're not going to do something outside of it, because they will if it's really exceptional. So the last one I'm going to bring up on this one is how one speaks about exit, which is pretty critical to us. We're a minority investor. On one hand, we're private equity, so we want to know that somebody doesn't want to have a family business they're passing to their son. That's actually, or daughter, I should say, my own family. That's pretty important to us because we're going to want to exit. And we don't want to be in a position where a founder suddenly is like, oh, I don't want to exit. I want to run this for the next 25 years of my life and pass it on. So we are definitely looking for that and making sure that we're aligned with various players when we get involved with their businesses. The flip side of that is, I definitely have talked to people who say one of two things. This is going to be huge in a year or two, and then it's going to sell at this massive number. I always worry a little bit about that because it's a tough road. Getting something off the ground from scratch is a really tough road, and I realize that that's tough because I'm looking at founders every day that we're interacting with, and it's really more like a 4 to 5 year time period is sort of our investment horizon, and hopefully we can get to a place that it's looking really attractive. So I would say that ends up being a little bit unattractive. The other one is, as the founder, for a player like us, we're really going to be looking for the founder to want to lead this business. So I've had a few times people say to me things like, I'm really comfortable if we bring in an external CEO. And I'm thinking, well, we're talking about $1 million business right now. There's not going to be an external CEO for $1 million business that could help get this off the ground. It's going to take a lot of chutzpah, and it's going to take the personality of the person who actually created it to get it there. So it's an interesting balance just on how you talk about that with players is pretty critical.